What is up, you guys? Back on my show, part three of my YouTube little podcast that I started since we're all in this coronavirus quarantine. And today's a great day. I've been looking at so many of my friends' posts. One of my friends just wrote that she woke up this morning at 6 a.m. It's a Saturday and, made some food, had some tea. It feels like people are really living their life. A lot of people like to look at the downsides of what's going on with coronavirus, and yes, there is a lot of downsides where everything is shut down. But I like to look at a lot of the positives. Think about it. This is like getting yourself almost a free vacation. And yes, some people are getting paid, some people are not. But this is almost a time of a renaissance period where you can rediscover yourself, reinvent yourself, and really take time to meditate. I mean, you have freedom that you've never had before. And I always like to be an optimist and look at the positive of the situation. You don't have a schedule. You don't have to go out. You now have an excuse to telecommute, to telework. And now everybody's doing these like remote conferences. I mean, it's an amazing time we're living in right now. I mean, think about this. For the first time in human history, you can have a mass pandemic on a scale that's never been seen before, especially because travel is so easy. And so it's been spreading like crazy. But equally, what's absolutely astonishing to me is the fact that, we have connectivity on a level that's never been paralleled in human history. So, I mean, people are doing like these Zoom conferences and Hangouts on Google and Microsoft, and now you have education online. And so you're really seeing a full flowering of technology in general working the way it was intended to. And this is just what's just so amazing to me is the fact that you can now, people have underutilized technology for such a big portion of their lives, where I really believe it's possible to run an entire organization with very little overhead. In fact, I've done this for years with my own company, with Circle Plus Payments. We created a point of sale and payments app, and it empowers anybody in, 34 countries that we're in right now to do point of sale and invoicing. And we've always remotely worked. We've always, offshored all our stuff and outsourced things. And we don't have any offices or any really overhead. So we're almost like an Airbnb model for operating your business. And this is more true than ever now. You're seeing employees at Google, at Facebook, at Twitter, at Dropbox, all these big tech companies where, if you're just doing app development, you can literally just chill at home and, have a nice meal. And you can just have all your employees work from home in their comfort and still build that app and, telecommute and telework. It's just an amazing time that we're living in. And what I find even more astonishing is the fact that right now it's a very unique time in the whole history of humanity, because you have a time right now where you're going to get 2, 3, maybe 4 weeks off. And this is a time where you can really calm your mind and you can meditate and, you can really find what your passion is in life and maybe do a self-assessment. Many of us have never taken the time, because we're all on the grind, to do a self-audit of ourselves. You know what I mean? Where for the first time, I think you can just figure out what your schedule is. Figure out your sleep schedule. Figure out what time you feel comfortable going to bed and what time you feel comfortable waking up. So are you a late night person? Are you an early morning person? You can really figure these things out. Also, it's like for the first time, people are going to learn the ability to, cook at home and figure out what kind of food that they like and be really healthy as a person. And I think that's just really amazing to me, is the fact that we're living in a time where all this is possible. And then finally, the last thing which I find really amazing about all this is going to be a huge economic opportunity, and there's going to be winners and there's going to be losers. And are you going to be a winner or are you going to be a loser is the big question. Because for the first time, you have the ability since the 2008 recession to get in at bottoms that the market has not yet seen, and it will continue to do so. And I've been studying the market a little bit, looking at a lot of stocks and trying to learn from all the mistakes of 2008 of not acting, And now is the time to get greedy, to start acting. I think this Monday is going to be a Cyber Monday for stocks. I never give any financial advice. I can only tell you what I'm doing. But I personally think what you got to look for is the travel industry. What people get fearful of, that's when you start getting greedy. And with stocks, here's my recommendation of investing in stocks. I like to invest in stocks just like Warren Buffett, okay? And so here's the breakdown I'm going to give you of what Warren Buffett has used to make, his personal net worth of over $80 billion in the past, 40, 50 years playing the long game. And it's during these black swan events like this is when you get the opportunity. So Warren Buffett, and here's the multi-billion-dollar stock advice that I've learned, has done all of his investing and using a frame of mindset that he got from his mentor Benjamin Graham, who wrote this book called The Intelligent Investor. And I've read that book. And the fundamental thesis of Warren Buffett's psyche and his mindset of investing is finding companies that are value-added stocks, okay? So in this case, you're going to look at companies that pay dividends. So Warren Buffett doesn't care if a stock goes up or down. All he wants to know is calculate the math of the payback, okay? And so for that reason, he picks stocks like most people pick real estate or apartment buildings, is he looks at the cash flow and the dividend yield. And he wants to make sure that's a stable company with good management, with a long-term business proposition. And what Warren Buffett asks himself is whether this company will be around 10 years from now or 20 years from now. And that's the most important thing for him in picking a stock. The second thing is if it pays enough dividends that he can recoup the cost of the stock so it becomes free over the shortest period of time. And then the final thing is it trading at the percentage to earnings ratio, the P&E ratio is what you look for. What is that trading at? And if it's really low right now, it makes a good investment, okay? And so in this case, you look at cruise lines. Cruise lines are being hammered, but cruise lines are really big industries, and they are in a financially far better position than they were in 2008 and 10. Royal Caribbean, for instance, posted over $10 billion in earnings last year. That's $10 billion, far more than they were at. And they are trading at way below what they even earn in cash flow, right? Their market capitalization is down tremendously. I mean, the stock is down over 100 points. They were trading at over $130 a share. They're now trading at something like $30 to $32 a share. And as of the time of this posting of this video, and it's a company that pays dividends. So you earn, almost 7 to 10% on your money. And maybe that dividend will come down, but you're buying in at a good position where you're still getting the drip, every quarter. You're paid quarterly. And so I think over a period of 10 years, your investment will be free. In worst case, if nothing happens. Best case scenario, the stock goes back to where it was or close to where it was. And that might take some time. It might take 6 months. It might take a year. It might take 2 years for all this to recover. But cruise lines have shown to be very resilient. People were booking cruises while things were being canceled and countries were being shut down, until the cruise lines physically said, we won't let you on the ships and we are shutting down travel by executive order. People are still going on cruises. I mean, they were interviewing people. And so that just shows you, they keep cutting prices and they do deals. And cruise lines are very mobile. They can move country to country. They can operate wherever they want to go. And so historically, they've always been a very good long-term investment if you're playing the market. And also, some of the airlines are good investments. After, we're going to see what happens in the market this month. So I think Delta Airlines, maybe American Airlines, they all pay dividends. I think if you want to play it safe, you might be in a better position right now to put your money into banking stocks than even opening a savings account or a CD. And the reason I say that is Wells Fargo is paying 7.5% dividends right now, and their stock is down over 50%. And that's one of Warren Buffett's top positions, and so is Bank of America. So the way I look at it is Wells Fargo has been around since the 1800s in America, right? They were first, storing gold, and they've really always been around. And they're probably one of the strongest banks in the U.S. They're highly leveraged, but the banking controls are a lot more than they were just 10 years ago. So I think we're in a good position. And also what's interesting is about this recession is it's not a real recession in the sense that, there wasn't a financial crisis because there was over leverage of credit, or there's a fundamental housing crisis, or there's a bubble. I mean, the market was doing all-time highs. The Dow was at all-time highs. And all of a sudden, you're seeing the market to where it is today. And it's through a black swan event, which are these events that happen that are unpredictable. And that's when people get fearful. You're going to see we're in an election year. The market's going to come back up. And I think the market's going to go back up in 6 to 12 months. China's already opening up. And we're going to see the same thing happen over here. So I'm going to enjoy my tea, enjoy the rest of the day. And it's my thoughts on the Corona market economy.